Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with an exciting pick that we talked earlier. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. No matter how safe an investment sounds, there's risk involved. To read more about it, please see the description below. Today's high yield income pick, Spok Holdings Inc., traded on Nasdaq under symbol SPOK, is a tech stock we looked back in April. At that time, the company was trading at $11.83 per share and had a frothy dividend of 10.7%. A lot has changed since. In this case, it's all been good. It announced it was added to the broad market Russell 3000 index in late June. Membership in the US all cap Russell 3000 index, which remains in place for 1 year, means automatic inclusion in the small cap Russell 2000 index as well. Spok also reported strong second quarter results and it increased full year 2023 guidance. And that's been great news for shareholders. Since we last looked at Spok Holdings in April, the company's share price has rallied around 11% and it has maintained its high yield dividend. So John, what can you tell us about Spok Holdings?
Yeah, thanks, Mo. Well, typically, rising interest rates and cash-starved tech stocks don't go hand in hand. In fact, rising interest rates, which makes borrowing more expensive, has made the tech industry a tough environment to be in, for the most part, unless you're one of the big AI companies. But not all tech stocks are taking a hit. One of the biggest winners over the last year or so has been Spok Holdings. Spok Holdings is a healthcare communications company. Through its subsidiary Spok Inc., the company provides healthcare communication services to hospitals in the US, Canada, Europe, Australia, and the Middle East. Its product portfolio helps healthcare team members communicate more quickly and efficiently and effectively. In fact, Spok is the leading paging carrier in the US with over 815,000 pagers. The company's products are used in more than 2,200 hospitals, sending over 100 million messages each month. This includes 18 of the 20 top hospitals and all 10 children's hospitals named in the US News and World Report's 2022-2023 Best Hospitals Honor Roll.
John, I know and I clearly remember we talked about this in April, but remind us why pagers are so important to healthcare professionals. You know, they definitely seem like an outdated technology or a way of communication these days.
Yeah, you're absolutely right. They're not flashy, they're not bendable. You know, you can't do much with them, frankly, but pagers are, in fact, the safest, most reliable way for hospitals and doctors to communicate, surprisingly enough. They only need to be charged once every week or two, which means they're less likely to lose battery and don't need to be charged all the time like a cell phone. Pagers are also more secure than cell phones. It's easy to send confidential messages over text, which could be compromised or stolen. Pagers only send numeric messages or basic text messages. So it's essentially impossible for confidential information to get in the wrong hands, something that is common, of course, with cell phones.
All right, now let's dig into the fun stuff. How did Spok do in the most recent quarter?
Well, it continues to report strong financial results. In fact, it reported record results in the just completed second quarter. I'll just give you a few numbers. Don't want to bog you down too much, but some of the juicier ones. In the second quarter, total revenue was up more than 8% at $36.4 million. Net income was up a whopping 146% at $4.7 million or 23 cents per share. Adjusted EBITDA jumped 80% to $8.5 million. And most importantly, and this is why I think the company is doing better than most tech stocks, in addition to great financial results, it ended the quarter with cash and equivalents of around $31 million and has a zero debt, which is pretty uncommon for tech stocks, let alone small tech stocks. And based on the strong year-to-date performance, it increased its full year 2023 revenue guidance estimate for revenue and adjusted EBITDA. So it increased its revenue guidance to a range of $134.5 million to $137.5 million. And it increased its adjusted EBITDA to a range of $25 million to $28 million.
And how are the dividends looking at Spok Holdings?
Back in February 2022, so a year and a half ago, the company's board announced a new strategic business plan, one that prioritized maximizing free cash flow and returning capital to shareholders in the form of a high yield dividend and share buybacks. At the time, it hiked its dividend 150%, actually from 12.5 cents to 31.25 cents per share. And it has maintained that payout since then. That works out to an annual dividend of $1.25 per share, which as of this recording works out to a dividend of 8%. which is significantly higher than the current inflation rate of 2.9%. For those wondering if the high yield dividend is safe, it is. The payout ratio is just 71.4%, far below the 90% threshold I think we're willing to stomach. As some readers may have noticed, the current dividend yield of 8% is actually lower than the 10.5% yield it was back in April. Normally, we don't like to see a dividend yield go down. That typically means the payout has been cut. But in this case, the lower yield is because Spok stock has been on a tear and the payout has stayed the same. It's important to remember that yield works inversely with the share price. As the stock price goes up, dividend yield goes down, or as the stock price falls, dividend yield goes up. I know some investors think that higher stock prices correlate with higher dividend yields, but it's actually the opposite is true. And thanks to the company's growing revenue, strong profitability, zero debt, and pledge to return capital to shareholders, I wouldn't be surprised to see Spok increase its dividend at some point in the coming quarters. It certainly has the cash to do so.
How has the Spok stock been doing lately?
When we last looked at Spok Holdings, it was trading at $11.83. And on July 31st, it hit a new record high of $15.10 per share for a 3-month gain of 27.6%. That's a massive gain, like no matter how you look at it. But you have to put everything into perspective. This is the stock market. Over the same time frame, the S&P 500 climbed 12% and the red-hot Nasdaq 20%. Both impressive, but not nearly as good as Spok. We've actually been keeping a close eye on Spok Holdings for a while now. When we looked at it back in 2022, it was trading at $7.97 per share. And Spok has advanced roughly 90% since then. But more broadly, Spok Holdings stock has had a pretty strong year, trading up 8% over the last 3 months, 75% year to date, and massive 131% year over year.
All right, John, thank you so much for your analysis. Just to recap, our opinion on Spok Holding hasn't changed since we last looked at it back in April. It's an excellent ultra high dividend stock that has been providing shareholders with capital gains as well. In fact, since April, Spok shares have jumped more than 27%, and it's held its annual payout at $1.25 per share for a dividend yield of 8%. In 2022, it announced a strategic business plan prioritizing maximum cash flow and returning capital to shareholders in form of reliable high dividend and share buybacks. Since then, the company has realized significant business improvements in virtually every area, including sales, product development, and overall execution. It has a strong cash balance and remains debt-free. Spok Holding, in a word of CEO Vincent D. Kelly, firing on all cylinders, which is why it was able to once again increase its full-year guidance estimates for revenue and adjusted EBITDA. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.